tariffs are changing again, maybe, sort of. The market is down and things are falling apart. So what do we need to do to build a tariff-proof portfolio? That is what we are here to do, because I don't think you are enjoying these types of swings. And if it is possible, wouldn't it be great to have something where you can just tune out the noise when it comes to tariffs? Well, the answer is I have something that is for you. So let's go ahead and break it down. Now, I prefer tariff resistant because what you don't want to have is a portfolio that is very highly correlated with tariffs. Meaning the stock market takes one step to the right, you go one step to the right with it. And when it goes down like it did on Monday, it was down 800 points, your portfolio takes one step with it, just like the entire market. You don't want that. You don't want that. So you want to be very specific and choosy about what you're investing in and how. What are those industries? That is what we are here to figure out. And as we do, two things. One, go ahead and hit that subscribe button. You're going to see exactly why here in a second. This is something I did absolutely call last year. Number one, I told you about the two different sections that the president had and used for this specific act. I will link to that video here. Maybe I'll put a clip in, I'm not sure. But the first thing is I said about the emergency powers. I said if it was an emergency, how could you continue to delay it? And I said there was also section 122. And I said how this thing could go to court and the Supreme Court could do something about it. And if they didn't do anything about it, you can move it over to section 122. Stay ready so you ain't got to get ready. Hit that subscribe button, because a lot of times we know what we talking about over here. All right, I ain't perfect, but I sure do know a lot. All right, now the first thing is you want to build this portfolio in layers. All right, in layers. Now, two of these I think probably talked about a lot, but we do have a lot of new subscribers. The first one is gold. Gold has done well. Gold is likely to continue to do well as these tariffs moves and shakes. And who knows how his mind is going to change. This is going to continue to create chaos and opportunities. The reason why is because this is a flat line 15% tariff across the board. The weird thing is that 15% is a discount for some countries, but an increase for others, which is crazy to think about. Because he took away the emergency powers, I don't have a chart of all the tariffs all across the world. I didn't take the time to memorize them all. But for example, let's say that China at one point was like 100 something. I don't know what the final one was, but now it's 15. And he started out, he said it was 10, then went up to 15. But in either case, this is only going to last for 120 days, which I said in that original video. So one, it's only going to last 120 days. So there's that. But also, whatever China's tariff was, it was higher than 15, and now it's lower. The tariffs that they negotiated in parts of Europe, in some cases, I think Switzerland was like 7-ish. We can post that here. But whatever it is, now it's 15. So it's going to balance out and help some countries and hurt others. That's not great. It ain't great. And it can only last 120 days, which, some people are going to try and import over. Some people are going to try and wait this out. It's not going to be great for industry across the board, and obviously make things in some cases more expensive and in some cases less expensive. Because of that, gold is likely to continue to be a spot that is going to be quite good and, to my knowledge, still tariff proof. Next is international stocks. Now, I've talked about international stocks. I've done a video about international stocks, particularly international funds. This is one reason as to why I have brought that up, even though people didn't believe me the first time around. And to go back real quick, I did a whole video on gold in case you don't know how to get in, the pros and cons of all that. But back to international stocks, again, I did a whole video on that. I talk about this often because looking at it in context is crazy. The US was only up like around 15 to 17% in 2025. South Korea was up like 60 to 70% by itself. There are pockets outside of the US that are doing quite well. So as you're building up these layers, look at gold, look at international stocks. Those two things alone can help you with this tariff situation. And if you are choosy, you might be able to find some very good pockets of value, especially if you notice that, hey, wait a minute, the tariff in the region that I might be investing in actually went down from whatever it was down to 15%. Or as these tariffs may expire in 120 days, that might help you as well. I wouldn't bet on the tariffs expiring because who knows what other chaos could pop up between now and then, but it is something that you could pay attention to. Also, Do not forget that there is a midterm election this year. That is something that will play a major factor in where tariffs go from this point forward. I repeat, there is a midterm election this year in the US. Again, we have international people here all the time. That could play a very, very big factor on where tariffs go from this point forward. Pay attention to that, circle on your calendar. We can come back to that. But you got gold, you got international stocks. Now for the domestic stocks, which more people are going to pay attention to. Yes, you can invest in index funds that are likely going to be good, except they're very heavy in AI stocks. Now on Monday, the 23rd of February, AI stocks did not do well. The market was down like 800 points. All right, here's what you need to do. There are 3 industries that I have identified that are very tariff resistant, mostly because they are domestically produced. Like they don't ship too many things. I say nothing. They don't ship too many things abroad or import a bunch of things either that can be tariffed too much. Okay, so that's good. You can't be tariffed if you don't send too much stuff out. I guess except for Netflix. And I'm going to give you a few companies. I'm not like endorsing these companies. I'm just giving you some examples. So look for these companies and their competitors and do more research there. I will give you my favorite out of this list though. One is energy. We know that a lot of these AI companies are using a bunch of energy. Nobody likes it. Duke Energy. Nobody likes it. But NRG is one of those. Nextera, NEE. I think that one's my favorite of the list I'm going to give you. Those are places to look for because, again, not a ton of these companies aren't exporting these to other countries. A lot of these are regional for the most part. Not all, but most of them are regional. They don't have no exports to be tariffed to because you're serving just your state, just your region. Where's it going to go? And again, as we have a higher demand for power, even just for electric cars and things of that nature, that should continue to help these companies. You guys know I've talked about energy for years now, and that has paid off. All right, so look for companies like that. So energy is one. Utilities, technically utilities are slightly different because you can throw in a water company there too. But energy and utilities are 2 spots that usually pay good dividends, usually quite consistent. But in this era, those are 2 of the top performing industries year to date in 2026. I know it's still early, but those are the places that you want to look that are tariff resistant. There's also another one, and I feel like I pull this one out of my pocket every 2 years or so, and that is healthcare. Now, healthcare is not 100% tariff resistant, right? There are some things that we get from China that is getting tariffed, but that's not every single industry. There are different pockets, right, of healthcare. You got the drug space, you got the manufacturing space, you have the transport space, right? Eli Lilly is one. Gilead Sciences, Gilead Sciences, GILD. Let's just say that is the ticker symbol there. LLY is Eli Lilly. Eli Lilly we used to talk about a lot. Both of those are places just to start your research. But healthcare, utilities, and energy, those are the 3 spaces. Now, if you want to get even deeper into those, I would look at index funds in those 3 categories, especially for energy and utilities. The problem with getting a broader index fund, which again, I ain't got no shade for index funds, is because I think it's like 38 to 40% is just in AI, and that's just because Nvidia, Meta, Broadcom, they're so heavy into AI, it's weighing the entire S&P 500 down. Or it can boost it up when AI is good. But if you want to get the benefit of investing in places that aren't as volatile and definitely resistant to some of this tariff chaos, it's those 3 places that you absolutely want to pay attention to. And it's a lot easier on you where you don't have to go and research every single spot by looking into some of those funds. If you want me to go and create a list of some of those funds, let me know in the comments. That's something we can add for next week's list. But if you want to know more about the stock market and everything in between, you want to check out this video right here.